After the COVID, the APAC investors are seeking all possible ways to increase their liquidity. The bid and ask spread may be over 30%. The LPs are also looking for the niche GPs or secondary managers who can provide them alpha. Miscommunications or misalignment of the interests would be the major reason for the deals to fall apart.
Hi everyone, thank you for tuning in to another episode of Women of Secondaries, produced by Secondary Link and hosted by yours truly. My name is Kristina Kulikova. I'm the Senior VP of LP Advisory at Setter Capital, and I'm absolutely privileged to host Women of Secondaries, where we cast light on the incredible powerhouse women driving this market. If you missed our prior episodes, make sure to check them out on the Secondary Links video and podcast section, YouTube, Spotify, or catch short snippets of the discussion on Secondary Links' LinkedIn page. On today's episode, I have the absolute privilege of chatting with a managing partner at AB Value Capital Partners, a highly regarded player in the Asia-Pacific private equity secondary market. Some of you may know them as the group that spun out of Japan's Ant Capital in 2016 and rebranded to AB Value Capital Partners. Currently, they are one of the most experienced private equity secondaries investors in Asia, with offices in Singapore, Taipei, and Tokyo, and have raised over $900 million across 7 dedicated secondary funds. We don't often get to hear about the secondary market trends, its adoption and expansion from the other side of the world, as our news feeds sometimes get overshadowed by European and North American activity. So I'm very much looking forward to hearing from the brilliant woman we have on the show today, who is not only a dedicated investment professional with close to 20 years of experience in secondaries, but who is also passionate about the growth and expansion of the secondary market in Asia. With that, I'm glad to welcome the managing partner of AB Value Capital Partners and a true industry professional, Agnes Tang. Welcome, Agnes.
Thank you, Christina. With a pleasure. Happy to be here.
No, we're so excited to have you. And first of all, thank you for your dedication and agreeing to record this webinar for me when it's essentially close to 10 p.m. your time. So you must truly love what you do. Thank you for that.
I do, because usually I'm an early bird, so I go to bed very early, but very happy to be on this interview.
So it's an extra privilege. So I understand prior to AB Value, you also worked at W.I. Harper Venture Group, Uni President Asset Management, HSBC Asset Management, and of course, ultimately at Capital. Could you walk our audience through a short history of how you ended up in secondaries and ultimately your instrumental role in AB Value's success when you became managing partner in 2021?
Yeah, with pleasure. It's actually long stories, but let me make it short. So before AB Value, I was working in the venture capital firm W. Harper. It's headquartered in San Francisco and has the offices in Beijing, Taipei, and Singapore. And when Ant Capital became the LP of W. Harper through the secondary transactions, I get to know the founder of AB Value. And then in 2006, I left W. Harper and went for an around-the-world trip. And during the travel, I received a call from him to schedule a catch-up after I returned to Taipei. And at the end, the catch-up became an interview. And then I was persuaded to join his newly set up office in Taipei for the secondary investments. And I found that quite interesting, quite different from the prior VC strategies that I used to have. And then all the way, starting from the manager, the first day when I joined AB Value until today, after 17 years, I'm still here.
That's an incredible story. And sometimes, you just happen to be in the right place with the right skill set, with the right people surrounding you, right? That it just makes sense to make that transition. Well, we're very glad to have you in the secondary market. I think you're a major value add. So I'm glad that turned out the way that it did.
It did.
So now let's get into the main part of our discussion. And of course, as rapidly as the secondary market has grown over the last decade, there are some notable differences between the Western and Eastern part of the globe, both in terms of volume, adoption, process, etc. Now, some do say that the Asian market is really the next driver of opportunity for secondaries and for its growth. And already there have been many buy-side shops like HQ Capital, Altamar, Pantheon, Klein Hill Partners, who are traditionally European or US-based firms, but are opening up offices in Singapore, in Hong Kong, etc., to take advantage of this expansion possibility that they're seeing in the market. And you experience it firsthand. So perhaps as a good backdrop question to start our discussion today, how would you compare the current capitalization, evolution, growth of the Asian secondary market compared to that of Western Europe, North American market? Whether that's in terms of, buy-side players, adoption of secondaries as a portfolio management tool, capitalization sources, etc. So I'll leave it to you.
Sure. This is a very good question. I think that most of people understand that APAC secondaries basically lagging behind the US and Europe. And in my personal view, I think that the turmoil in APAC in the past 2 years, whether it's because of the COVID or some geopolitical issues, etc., actually are activating the secondary booms here. No matter it's like LP or GP, I think both of them have accelerated to accept adopting secondaries as a convenient tool to create the liquidity by themselves. And for this, I'm actually very optimistic and excited, especially so many lower to mid cap GPs who actually had quite solid assets, but scale is too boutique to get the very big secondary funds attention. So, for example, in AB Value, we got so many inbound inquiries from GPs or directly from the seller to seek the devices. In our last 12 months, the pipelines are actually triple compared with before. I think that a APAC secondary transaction, the CAGR, would be much higher compared with the US and the Europe in the next few years.
And that's probably where we'll see the most amount of creativity as well coming out of that market, right? Just because there is so much eyes on it now. Because you're right, I think the adoption is starting to take place quite a bit from both LPs, GPs, buy-side firms, etc. Even private individuals, we see a big rise in uptick of secondary adoptions, high net worth, etc. Now, there has been quite a significant rise in LP secondary deals coming out of the Eastern Hemisphere, the APAC region, both late last year, earlier this year, including the likes of, I think, Shin Kong Life and other insurance companies specifically that have taken processes to market. What do you find has been the biggest rationale driving the sales for the APAC sellers? Maybe first focusing on LPs and then GPs respectively.
Yes, we have been tracking this for a really long time. I think that most of the APAC assets, of course, majority of them are venture growth type of the assets, which is seriously impacted while the traditional exit route by the IPO wasn't that smooth in the past 2 years. So you can see that the exit activities are muted. So the fund distribution pace is even slower. So our perception is after the COVID, the APAC investors are seeking all possible ways to increase their liquidity. And now they accept the secondaries as a tool to rebalance the portfolio or reorganizing their GP relationships. I think they are just trying to catch up, like how their peers in the US and the Europe can do to make their divestment activities more feasible.
So would you say it's fair to characterize it as it's what started out as liquidity driven is starting to become more of a widely accepted portfolio management tool, not necessarily even for liquidity sometimes, or is it predominantly still liquidity driven?
I would say the liquidity driven. And
Still.
also, by catching up with the trend from the US, not only secondaries, also the PE investment, this kind of the sectors strategies are kind of like following the trend from the West. And nowadays, they are more prevailing in a much faster speed compared to what was developed in the US and also Europe.
Interesting. What are the biggest process differences you see when buying from a European seller versus a North American seller versus an Asian seller? Whether it's from regulatory or a timeline perspective or anything else material that you tend to notice?
I have to admit that most of the time I am approaching the APAC sellers, but based on our experiences, I think that the US and the Europe sellers, they have been acquainted with secondaries for years. So definitely they are more experienced, not only in the process or the practices, but also very practical for the pricing. So that is the first major difference. And I think it's subject to different type of the sellers. But in general, I feel that the APAC sellers tend to hold the assets longer before they decided to sell. And then their internal discussion and also the internal decision making process usually are more complicated. That is what we felt in the past.
Interesting. So I guess you serve the role, you kind of wear both hats, where you're both the buyer who's providing a solution and also the educator of kind of walking them through the process and showing them how the process would work.
That's a very good comment. Actually, we have been educating the market since Japan to Taiwan to Southeast Asia, Greater China. That's what we have done in the past 17 years.
I guess carrying the role of a major secondary player in the APAC region, you sort of have to take on that role, right, of educating the market. Well, secondary market transactions are definitely getting more complex and strategic in nature in aiming to solve for a variety of scenarios in the most efficient way. What type of structures do you tend to employ, whether it be in GP-led deals versus LP deals that have really helped you bridge the pricing gap that sometimes does exist between buyers and sellers?
I think it's really case by case, but in a more general way, for example, like deferred payments, right? Quite commonly used, preferred equity, earnout, subject to some milestones, or sometimes we would also consider the asset-backed bridge loans type of these structures. Also, in some cases like GP-led, we also co-work with the GP to share the responsibilities of the exit and the divestment. Of course, there will be some economic interest adjustments, but that can also help us to be more aligned with the GP and to facilitate the divestment as we wish.
That's not something I hear very often about, but glad to see that it's getting a lot of traction and you find that it does help facilitate deals to the finish line, right? When there's that alignment and both sides of the table are sort of aligned on the deal.
Yes, I think that is because we actually started from direct secondaries. So our DNA is direct secondaries, which means that we monitor the portfolios by ourselves and we divest the portfolios by ourselves. And that requires a lot of the expertise, network with the sectors in the market. So that is why we can do so. And by arranging ideal terms and economic interest sharing with the GP, I think that it's actually win-win for both the GP and also us.
Interesting. And do you find, this is a little bit off the cuff, but do you find that from an education standpoint, when you're employing these different structures for deals, do you find you have to educate more the GPs when you're working on GP-leds or the LPs that are really more passive investors in a sense, right? Like, where's the information gap on secondaries more prevalent? Is it on the GP side or is it on the LP side?
You just raised a very good question. Education for sure. But I would say that most of the counterparties, they welcome the non-traditional or creative ideas that we proposed because most of the time we think from the sellers or the GP's perspective. We discover what really matters to them, and then we try to match the win-win solutions because it's impossible just to take advantage of one partner or one counterparty, and you cannot do business like that, right? So while educating, I think that we also get to know what really matters to them so we can adjust our terms and the structures dynamically. And eventually, I think that's a double side learning process.
Yeah, secondaries are definitely not a cookie cutter approach. For sure. There's always nuances and intricacies that are different to every process. Well, last year, I believe it was Neuberger-Berman that led Japan's J-Star almost 18 billion yen continuation fund, which, if I'm not mistaken, is one of, if not the first successful continuation fund deals in Japan specifically. But it does seem that momentum is picking up for continuation vehicles in APAC, with a wide array of Asian GPs focused on GP-led transactions, as you mentioned. However, from your seat, what you have found have been the biggest reasons why a deal has fallen apart in those instances.
Yes, I think there are many GP-led now happening, and some of them not even reach the price consensus at early stage, or some of them even reach consensus, but they didn't pass like APAC, that one, or sometimes maybe just fall apart because not sufficient syndications, all kinds of the reasons would make that fall apart. But I would say, based on my personal experiences, I would vote like miscommunications or misalignment of the interests would be the major reason for the deals to fall apart. There is no perfect deal. And among sellers, LP, the GP, the buyers, asset management, assets, other shareholders, each one has his own economy interest and targets. What exactly he likes, what exactly she wants or she doesn't like, all that are different, right? And if you don't fully understand each party's real demand and their limit and constraint at the very first beginning, I would say that it's very challenging to get the terms done. And if you don't communicate well with the full transparency in the whole process, it's also very risky that accidents or unexpectations happened, which become the deal breaker. We learned some lessons in the past.
And you mentioned a really good point where you said communication, right, leads to sometimes breakdowns of these transactions. Do you find that it's more often communication between the GPs communicating the terms of the deal to their LPs? Or is it the buy side and the GP that can't, speak the same language, so to speak?
I think that all are included in what I just mentioned. But we are also picking the GP. It's almost like our co-working partners, right? So we are also picking the GP who is very transparent with their LP and who can communicate in the same language and same concept as what we conveyed. So if they can convey this kind of the message to their LP with the full transparency and honesty, I think that most of the time the process would go smoother.
Yeah, that's, I think, a very vital point to where the messaging doesn't get misconstrued, right? Or the motivation doesn't get misconstrued, or the terms of the deal, obviously, between the buyer through the GP to the LPs.
Sorry, I want to make one supplement on that. I
Sure.
think that the trust at the beginning between the GP and us are also very important. If you don't have sufficient trust, basically you cannot conduct the following communications well. And if there is some space without the trust, it's very easy just to have the misunderstanding.
Because I guess the GP, both the buyer and the GP have to believe that each respective party wants to come to a deal that is in the best interest of everybody involved, right? And not just for their own interest on hand.
Yes, it's not like opposite, right? It's more like we are co-living.
And that's the best part, I think, of secondaries is this camaraderie in the industry, right? To make a deal happen is there has to be a level of trust and a level of almost friendship and sound business practice to make it happen. Well, we've recently seen, of course, the deterioration of US and China relations, which has led to particularly US LPs looking to exit or lessen their exposure to China. I believe it was ADIA who participated in offering liquidity to Pacific Alliance or the PAG group, LPs for partially that reason, right, where some LPs wanted to lessen their China exposure. I'm curious from your seat, how have the tensions between US and China impacted the deal flow you see and focus on? Has it encouraged you to look more at China deals, given that now maybe US is more selective and the deals are more viable from a pricing standpoint? Or has it made deals in other regions more expensive, in markets like India, due to now the increased shifted competition from the US or Europe, et cetera?
Yeah, I think that you just pointed out, as everyone can see, that the US buyers nowadays are more cautious when they look at the APAC assets. Some of them didn't really come to look at the assets here. And some of the US investors, they tried to cut their APAC VC growth assets exposures a lot. But so far, based on what we observed, there are many motivated sellers, but not to the extent of desperate sellers yet. So because of this, the bid and ask spread remains very wide, and not too many meaningful transactions done last year here. However, based on our pipeline analysis that we did this like on quarterly basis, we do see that the gap is narrowing by 40 to 50% since early this year. So things are changing definitely.
Wow.
And as a conclusion, I think this is very positive development for APAC secondaries because nowadays people and also capital, they not only look at China and also India. Now we saw more pipelines coming from Australia, from Japan, from Korea. And in terms of the scale, I also saw a lot lower to mid market GP-led transactions. And you mentioned about India, right? I think no matter what, valuations in India remains high all the time.
Just a clarification on the pricing component that you mentioned, the gap is starting to narrow, but, by maybe 40, 50%. Is that just in relation to Chinese secondaries or the APAC region in general that you're seeing that bid and ask spread starting to narrow?
I actually refer to like especially VC or growth APAC assets. Of course, majority of them are in China. For example, lots of the LP secondaries, LP stake transactions we saw last year, the bid and ask spread may be over 30%. And nowadays we see that is sometimes shrink to 15% or 10%. So it's improving, I would say.
And is that shrinking more because sellers are more tolerant to a larger discount, or is it because the valuations have come down a little bit from the GP's perspectives, or just more faith in the market from the buy side that you can price them more aggressively? What's driving that bid and ask spread narrowing?
Actually, several reasons. First of all, I think the market sentiment is more certain, more positive. So more buyers are willing to offer, right? Or willing to look at the upside of the growth of the venture assets. And second, many sellers, they didn't get their transactions done. So at the end, they just keep accumulating the pressure and again, eventually that they are losing time. So they are getting more willing to accept the discount. That also help to shorten the gap of the bid and ask. But sometimes it's just the asset itself that performance have turning around. So overall, I think that there are mixed reasons.
So I guess all of the reasons have to come in place to really see that drastic shrink of the bid and ask spread, right? So that would make sense that it's all coming from all sides. And you mentioned this in terms of India. But I think there has been a lot of activity out of both Korea and India and Japan over the last, I would say, maybe 6 to 9 months, where we are seeing improved exit, improved IPO activity picking up, as well as secondary activity. But what, in your view, is the strongest geographic market in Asia, sort of APAC region today, where you see high secondary return deals, and what is driving the strong return prospects there?
Christina, this is a very challenging question. I might not be able to specify any single country here. Otherwise, next month, we will see many competitors for our deal. Okay. Maybe let me put this way. In AP value, we usually analyze the returns, like half comes from the purchase discount and half from the growth of the assets. Case by case, but could be EBITDA profit growth or multiple expansion upon exit. Basically, we don't do the leverage at all. We are kind of reserved and conservative. And speaking about the region, I think wherever that you have deep local connections so that you can reach the motivated sellers with special situations. Not only fund expiration, could be in our experiences, shareholders disputes, change of the CIO, CFO, or strategic considerations, etc. which is more possible for us to negotiate the discounted entry and perhaps the downside protection. And then I would say that's halfway to secure some returns. And of course, both the assets and also the manager quality are very important. If the assets have proven track records and in the right trend sector, I think that the extra upside is very possible. But last but not the least, if you can effectively align the interest between the asset management, the GP, even the seller, to form a strong consensus about the exit strategies and also the exit timetable, I think that is the very important key to make really good returns.
It's a very, very politically correct way of answering the question. I love it. And well, no, but I think you are very correct in saying that, despite the external macro forces that may be at play in certain geographies, the key component remains relationships, right? It remains your knowledge of the market, of any market, be it, and the relationships that you're able to develop within those markets. So noted. Well, lastly, before we wrap up our perspectives on the market section, would love to finish off with a couple of geographic comparisons. Perhaps starting with, in terms of the APAC focused secondary funds, what is their biggest strength relative to US or European secondary funds?
But this question, I think I need to echo what you just also mentioned. Of course, the local talent and the unique, extensive local network definitely are the advantages, right? Because it's relationship. So it's easier for us to have the proprietary sourcing, unique channel to conduct the due diligence, reference checks, get better sense as to how the asset could exit in a more pragmatic and feasible way. And I think that the similar Asia culture and also mindsets also makes us easier to communicate and also negotiate with the sellers here.
And do you find that that's leading, like the strength that obviously you have in the local market, do you feel like that's leading to a lot of consolidation or partnerships or JVs between sort of European, US, and Asian secondary funds, where each is leveraging maybe, the Asian secondary fund is leveraging capitalization from some of the US or European secondary funds, and the Western Hemisphere secondary funds are leveraging the networks and the relationship that an Asian secondary fund would have in the market. Are there collaborations like that you often see, or not so much?
If you are talking about a collaboration, such as lead and also syndications, yes, I do. But in terms of like a JV, maybe it's happening, but I didn't see a really popular trend because there is some still very difficult and challenges there to really form a JV, I would say.
And can you speak to maybe the return comparisons of Asian secondary funds versus European or US secondary funds, and maybe a little bit about what may be driving that difference?
This is a very good question. I think the key difference, the type of the assets here are more VC growth than buyout, which is the opposite compared with the US and Europe. And because of these assets tend to rely on the IPO as the major exit routes, so if you invest in more APAC VC growth secondaries in the past, I would say that the performance might have more fluctuations compared with the US and Europe secondaries funds. Because of the different phenomenon here, I think that it makes the APAC secondary funds focus more on the niche strategies rather than a generalist. So, for example, in AB Value, we are one of the very few secondary players that started from direct secondaries since 17 years ago. And as of today, half of our portfolios are still direct secondaries. Our core, of course, are providing the capital and also liquidities to all type of sellers. But besides that, we are also capable to conduct some non-traditional secondary transactions, such as turnaround, such as buyout deals, opportunistically. And because of the proper diversifications and allocations, for example, our latest Fund 7 has achieved the first decile performance as of today. So I think that niche is really important, and also what makes the differentiation.
It's a very interesting point you bring up that I actually didn't make the parallel to before, but there is a lot of conversation of as secondaries mature, we're going to see more and more niche focused players or specialized players, right, for particular sectors. On the one hand, it helps LPs decide where they put their capital, right? If they need to tailor their portfolio in a certain way, they can try to do that through a niche specialist secondary fund versus kind of a global do it all type of group. But then also it does give you much better comparison of returns between kind of niche sectors versus the more vast and kind of global, I shouldn't even say global, but more across asset class sectors. And it's interesting that we're seeing that happen in Asia to where now we can take the return comparison and see the differences, right? And maybe the niche specialists are better because they are able to have stronger due diligence capabilities. They know the specific sector extremely well versus focusing on deals that are kind of easier to underwrite per se, where you do need to spend a lot more time doing that due diligence. So that's interesting. It just kind of made me think of this is kind of off script, off record, but I think we're going to start to see more and more specialization like that and niche secondary players arise, not just in the APAC region, but globally as well.
Yes, and I got this I feel this very deeply, especially after the fundraising. I think that LPs are also looking for the niche GPs or secondary managers who can provide them alpha. And the alpha comes actually the niche strategies or special focus like this.
Because you know that market, right? The LPs are relying on your expertise in that space or the GP's expertise in that space. Yeah. Well, thank you, Agnes, for sharing your incredible knowledge and experience with our audience thus far. This next part of our chat, I really call the bragging rights corner, where I would love to learn about perhaps some incredible performance tidbits you'd love to highlight, and perhaps starting with any personal highlights or accomplishments you'd like our audience to walk away from and knowing about you.
Okay. I think that for my role, I think it's very rare that my secondary experiences actually grew all the way in the same firm, AV Value here. So as I mentioned that when I joined here 17 years ago, I was just the manager and I grew and transformed and evolved with this firm all the way and reached this managing partner level as of today, where I really need to thank other two senior managing partners that they never hesitated to give me the opportunities with lots of the coaching and also the guidances, advices, and always encouraged me not to limit myself as a lady here. And I think it's because of that I get to in the firm to start the LP stake investment strategy from original direct secondary space. And I was also able to do the first GP-led deal in AB Value and also led the first GP transaction in Taiwan and also kicked off our first India investment opportunities in our history. So I think that I am very, very lucky to have these two mentors like that. And together we built up this AP Value platform, very good platform, not only achieved very important, the gender equality, but also that the team can maintain a very good balance between work and the life. So I know that we chatted earlier. Maybe you also know that besides secondaries, I'm also an Argentine tango dancers for more than 27 years. So you
Wow.
know now how old I am. And now I'm still the teacher, the performer, organizers, and also choreography as my hobby besides my secondaries.
Wow, that's incredible. I think you covered so much amazing detail in that answer. And number one, I think, I've known you from speaking on deals over the years, and you're always very dedicated and passionate and intelligent. And the way that you approach things is always, efficient, but at the same time, very thorough, and which I've always appreciated in our kind of exchanges with you. But to know that, you can be hardworking, but you do need that backup or that tribe, right, of people that believe in you and push you. And you've obviously achieved incredible success at the firm, and I can see why. You're not only passionate at work, but also outside of work with things like tango. And I think it all comes together because when you do have that work and life balance, it really helps you become a better professional as well.
Indeed. I think everyone needs to have like this kind of the hobby, whatever it is.
That's incredible. And I confidentially, I also teach and perform Argentine tango as well. And so that's just awesome to see people who are in the same industry, but also share interests outside of that industry. And it gave me goosebumps. So thank you for sharing that.
I will go for you when I dance tango in New York or in the East
Please
Coast
do.
next
Please do. There's a lot of
time.
festivals, right? More in New York than in Canada, but I'm sure we can meet there. Well, taking the attention a little bit to the AB value side, can you speak to maybe what has been AB Value's most successful deal and why?
That's a very difficult question because we have many. But maybe I can share two examples. The first one is a GP solutions that we led exclusively. This is the first ever GP-led transaction in Taiwan, and we structured all the terms very well. And so we recovered basically 1.85 times of our cost just within 2 years. That's beyond our expectations. And this is the four-win deal. So everyone is happy with what they got. And after that, the GP not only conducted the second deal with us again, but also bring some government related sellers to us. So this is also the first time in Taiwan's history. So I think that this is very meaningful, while successful deal.
I was just going to say it brings back full circle what you were talking about, relationships, but also finding and looking at it from the perspective of all stakeholders involved, right? To make sure that the deal matches everybody's, like you said, it's a four-way win deal, which is so important.
Yes. And the second deal is a significant minority direct secondary during the pandemic that we spent 6 months in negotiating a very, very good discount while facing the shareholders dispute. So kind of like very difficult situations for the seller. And then after we acquired, while we helped the company for the potential bolt-ons and also preparing for the IPO, we executed partial divestment by selling some of our shares to strategic investors who can help this company. And because of doing that, we recovered one time of our cost just within 18 months. And then now the asset performance very strong and now stand, I think, at 4 times MOIC on our book. So I would say this is also a very successful transaction that demonstrate our abilities, how to negotiate, how to structure deals, how to prearrange the exit in different stages.
Yeah, and I guess you met both the company's needs to where then you resold it to kind of strategic investors that are able to still help the company grow as well going forward. So that's great that, even though it was structured in different timelines, it met everybody's goals once again.
Everybody's happy.
Yeah, that's the goal. And turning a little bit on the flip side of the coin, what has been AB's Value's most difficult deal to execute? And why?
I think there was one deal. It's related with the tender offer process. So we need to deal with a lot of different counterparties, including the government, regulators, authorities, and the whole deal execution was really time consuming, energy absorbing, and very complicated. That's probably the most challenging one that we have met so far.
Yeah, it's always either the legal or the regulatory components that make it challenging, right? More so, like, I think anybody that I've spoken to when asked about what's been their challenging deal, it always lands with either the legal part of it or the kind of regulatory part of it that makes it challenging.
Most of the time we did the private assets, but from time to time, even the listed companies has the liquidity issue, right? So that is why we came up with these deals. We have the capacity, but just the process is very complicated.
Yeah, lots of people involved to make it happen, that's for sure. And maybe wrapping things up, from a kind of performance standpoint, what makes for a good secondary deal in your books, and what parameters need to be in place to make a deal successful?
Well, I don't think we are too different from others. Basically, reasonable discount at entry, limited downside, never lose money, right? This is the first rule for our LP. Asset quality needs to be comfortable and better with some near-term liquidity. And all the parties' interests should be aligned with each other. And I think that the stories need to make sense, really make sense for us. So that would be the key parameters in my mind to make a good deal.
That's so if anybody's looking to start a secondary fund, you have your playbook right there of sort of top top things to keep in mind. Uh,
Yes. Check,
point.
check.
Exactly. Well, look, moving on, we're basically at my favorite part of the chat where we really get to dive in and learn more about the person that you are and, who's behind the incredible market knowledge that you just shared with us throughout this chat, which most people sometimes don't get to see in your professional life, right? And so getting a little bit more personal. Love for you to play along with a rapid fire section with me, and I'll just go through a couple of really fun, kind of quirky questions and hear your take on them if you're good with that. So, what time do you wake up in the morning?
Nowadays, usually 5 a.m.
Wow. So now I
I'm
feel
really
like
awkward, I admit.
now I feel extra special that you're spending your evening with me. What
After
are
this,
your
I will go to bed.
perfect? Well, hopefully you can wake up at 5:30 tomorrow instead of 5. What are your tips for staying productive during busy travel schedules?
Of course, I think planning is pretty important. Think and plan well, and never ask for perfection. This is also very important. Be realistic and prioritize things. I think this is very helpful for you to be more productive.
Yeah, nobody can get it all done, right? We have to, what's the most important thing to get done versus getting it all
Mm.
done, right? Yeah, well said. What is you're clearly very passionate about what you do. What is your favorite part of your job?
Basically, like meeting different kinds of the people and coming across different sector industries and then learning new knowledges all the time. I think this makes me really alive, vibrant, and also energetic. And also, I feel very fortunate that while helping people, I refer to that providing the liquidity solutions to the sellers, right? So while we are helping people, we can also make money at the same time. I think this is the best job that they can have.
So you feel both satisfied from a monetary standpoint and from like a good heart standpoint, right? That you're helping to solve for things, which is the best of both worlds. Now, there's always the flip side of the coin, where there's those things that you really just don't want to do or don't enjoy doing that you kind of put off. What is the least favorite part of your job?
There are not many, but recently I do feel that, at this level, and while getting more and more busy, I get less time to spend the time with our junior teams. So get more distance from time to time. And I think it's a really great pity because I like to interacting with the people. Especially I find that it's interesting also to learn the new things from the younger team. So, missing the opportunities makes me feel pity.
Got it. Yeah, that's actually interesting because you do have different perspectives, right, from everybody in the firm. And when you have a chance to interact with everybody in the firm, it gives you kind of a holistic picture. I can imagine that. What's your daily goal when you get into the office?
Actually very straightforward. This is something that I was thinking about every day when I wake up. I started to write my notes, reviewing what I have done and reviewing what I should appreciate. I would say that the most important thing is to do something meaningful and either to the team, to the firm, to the people around me, or to the people that who might need us. I think that this is the ultimate goal every day.
Hmm. So you're always keeping your eye on the big picture, right, to make sure that it is value add, whatever you're doing is value add in whatever capacity. Yeah.
Yes. Otherwise, I feel that, you are busy every day, right? You are always busy. And at the end, you don't know that why we are so busy. At least, I need to make sure that my busy get worth, that at least it has some meanings, even just the little meanings for someone else. I think that we need to remind ourselves all the time.
Yeah, and I think you just answered another question that I had next, but it was because the answer was very, very good. My question was going to be, what is one suggestion you would give to someone who's trying to increase their footprint and value add in the industry? And I think what you just said kind of nails that. But if anything else you would kind of add.
Also very similar to prior question and answers, I think is really think about what you want and then prioritize and never hesitate to ask for help or ask for advices. It's better outside your comfort zone. I think this is very helpful for me.
So you also probably answered this a little bit earlier, but what would you do if not finance?
Probably just to become a professional Argentine tango teacher, make a living by tango. I also have lots of plans that I can execute within this Argentine tango, field. I will share with you when we meet in person in the Tango Milonga next time.
That would be phenomenal. I would love to hear that and maybe even partake. So who knows? Life is long.
Exactly.
Well, wrapping up, I guess, this section and obviously pertinent to women of secondaries, why may women be well suited for secondaries versus maybe other areas of finance?
I think the secondary transactions usually require more patience and delicate communications in deal negotiation and also the processing, which I think that ladies are usually quite good and fit for that. And besides that, I think flexibility, sensitivity, and empathy for the sellers and being collaborative, this kind of the people skills are also females' characteristics that are quite essential in the secondary transaction.
Yeah, I think totally, because any interaction that I have with especially with this podcast with women in secondaries, there's so much intelligence and professionalism and knowledge combined with the skill set of communication and patience, as you mentioned, right, and delicacy and negotiations. So that's no, it's exciting to see more and more women joining the industry.
Same
Onward and
here.
upward. Yeah. Well, thank you, Agnes, for joining us on the show today. It's been so lovely to hear your perspectives on the secondary market, particularly through a Pan-Asian lens and an APAC lens. And I do believe that likely the largest volume of growth and sort of the next wave of expansion and wider adoption for the market will come from the APAC region. So I'm sure you will continue to be very busy in the years and sort of decades to come. And once again, everyone, this has been Agnes Tang, Managing Partner at AB Value Capital Partners. Thank you for joining us, Agnes.
My big pleasure. Thank you, Christina. Thank you.
Thank you. And as always, watch the Secondary Link LinkedIn page for updates on our next special guest. And we hope to see you in the next few weeks where we highlight the next incredible woman on the Women of Secondaries.